Hello everyone. Welcome to my channel InfoCraze. Today we are diving into a crucial topic for investors, entrepreneurs and anyone interested in the business world. The topic is company valuation. It is also very important for students in the field of finance. So let's get started. First of all, let us understand what is company valuation. Imagine you are buying a car. You would obviously want to know its value before paying for it, right? The same goes for companies. Valuation helps us to figure out how much a company is worth. In simple terms, company valuation is the process of determining the economic value of a company. It is the process of assessing the overall financial worth. One can also think of it as putting a price tag on the entire business. Now, let us understand why is company valuation so important. Company valuation is a crucial aspect for various reasons. Investors require it to take decisions on where to put their money. Entrepreneurs use it to attract the investors for funding. We also need company valuation for mergers and acquisitions. It is also required for benchmarking and performance evaluation of a company. So if you see, company valuation is required for various reasons and various aspects. So in order to fulfill all this requirement, we need a valuation of a company. Now let us understand the methods of company valuation. While there are several ways to value a company, let's discuss the commonly used methods. The first method, which is being very commonly used, is the DCF method. It is also called the discounted cash flow analysis. So what do we do in this method? In this process, an appropriate discount rate, which is often the company's cost of capital, is used to calculate the present value of the future cash flows projected for a company. So whenever we are doing a projection for a company's profitability for the next 3 to 4 years, we also get the cash flow which is generated from all the 3 to 4 years. So present value of all those cash flows, when added together, it gives us the valuation as per the discounted cash flow method. The next one which we would discuss is comparable company analysis. This method involves comparing the target company to similar publicly traded companies. The key financial metrics like PE ratio, enterprise value to EBITDA, these metrics are compared for two different comparable companies. So if we have an IT company whose valuation needs to be done, we also look for another similar comparable company in the IT field so that the metrics can be compared. The next method that we will discuss here is the asset-based valuation. In this method, the value of a company is assessed based on its tangible and intangible assets. Either the book value of assets, assets minus liabilities, or the fair market value of assets is used in this method. It provides a very conservative estimate of a company's worth, particularly relevant in situations where the company is facing financial distress and likely to be sold. Now we will look into the market capitalization method. This is a straightforward method, particularly for publicly traded companies. It represents the total market value of a company's outstanding shares. How do we calculate this? We calculate by multiplying the current market price per share with the total outstanding shares. This method categorizes companies based on their market cap into different segments that you may have heard that, like large cap, mid cap, small cap. So we do this as per the market capitalization method. The next one which we will discuss here is the venture capital method, which is also called the VC method. The VC method is common for startups and early stage private companies, particularly for those seeking funding from venture capitalists. This method estimates the valuation of a company at a specific point in future, typically at the time of exit, by considering expected return on investment for the venture capital investors. So we have discussed all these methods by which we can do the company valuation. Now let us understand what factors influence the method used for company valuation. Because obviously, before doing a company valuation, we will have to decide that which method is suitable for a particular company. Methods used for company valuation is influenced by a variety of factors. Financial professionals often consider a combination of methods to arrive at a comprehensive and well-informed valuation. Some of the factors which influence these methods are nature of business, stage of development, purpose of valuation, data availability, even the company size matters, and also the growth prospects. It is essential to consider these factors collectively and tailor the valuation approach to the specific circumstances of the company being evaluated. Often, a combination of valuation methods is used to arrive at a comprehensive and well-supported valuation. If anyone is interested to know more about these factors, please put it in the comment section. I will definitely make a separate video for explaining all the different factors. Hope you have understood the basic concepts of company valuation and also the factors affecting company valuation. Now let us see some interesting facts about company valuation. In some cases, a significant portion of a company's value may be attributed to intangible assets such as brand reputation, goodwill, patents, etc. One more important point about company valuation is it also depends on subjectivity and investor sentiment. Market perceptions, emotions and trends can impact a company's valuation beyond what traditional financial metrics might suggest. Some more interesting facts about company valuation. That is, one is role of regulatory changes. Changes in tax laws, industry regulations or environmental policies may influence investors on how they perceive a company's future cash flows and risks affecting company's valuation. So you have seen that if whatever company valuation we do, there are some external factors which might affect the valuation of the company. So in order to conclude, company valuation is a process that plays a pivotal role in the financial landscape, offering insights into the economic worth of a business. It facilitates transparency and informed decision making. So I think all of you have now a fair idea about what is company valuation and what are the factors affecting company valuation. This brings us to the end of this video. In case you find this video useful, please like the same and also subscribe to my channel for more such interesting topics in future. Thank you very much.